Love the payment before you love the house. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. And tonight is our Wednesday night Ask a Loan Officer night. So if you have questions regarding home ownership, regarding mortgages, tonight's the night to ask. But with Q&A, what I typically do is answer the most popular question people asked last week, and I answered on the live, and then after that, we go into some Q&A. So if you have questions tonight regarding mortgages or real estate, definitely ask. We're gonna start with tonight's most popular question. Why refinancing will cost more December 1st? So if you refinance December 1st, great. But if you didn't refinance before December 1st, there's something happening in the waters where it's more expensive to refinance. All right, guys, so let's get into it, right? Why refinancing will cost you more December 1st, right? Why is that? The reason why is because Fannie Mae and Freddie Mac are charging an adverse marketing refinance fee. Some lenders already started the adverse fee, but a lot of lenders, because they were competing with interest rates, held back on the adverse fee, right? But after December 1st, no one could hold back anymore, right? So they're gonna have to charge it to the consumer to pass on the cost, right? So the only way most lenders are gonna pass on the cost, I don't think a lender out there is gonna absorb this adverse fee, they're gonna pass it on, right? So Fannie Mae, Freddie Mac have decided, hey, things are getting risky, we need to make extra money to take upon this risk, so we're charging an adverse fee. That's what they're releasing in the press. That's what they're releasing in the news. So what is this adverse fee they're charging? And that was the most popular question these last couple of weeks. I'm assuming you're reading stuff on the internet, and that's why you came and you asked. And tonight we're gonna answer that question, okay? So before we talk about the adverse fee, you guys need to understand something called the loan level pricing adjustment. So if you read that article somewhere on the internet, that adverse fee, most likely they talk about the loan level pricing adjustment. What is a loan level pricing adjustment? You probably don't hear it too often. Lenders don't talk about it, right? Because what the lenders normally do is they'll give you a specific rate to absorb the loan level pricing adjustment. Typically, when there's a loan level pricing adjustment, there's a higher risk to the loan. So when you have a high risk, they add something called a loan level pricing adjustment. Well, what does it look like? No one really shows you. But on this show, of course, we're definitely going to show you. This is a loan level pricing adjustment. Boom. Pretty much most pricing adjustments are on conventional loans. There's not too many on FHAs, but there are some on FHAs, but not too often. Okay. So here's an example. This is for loans over 15-year fixes, right? You look here, based on credit scores, based on LTV, loan to value, right? For example, if you look at that 740 credit score, right? If you bought a home and you put 3% down, right? You put less than 5% down. There is a loan level pricing adjustment of 0.75. So typically, if you put 3% under 5% down, you'll have a loan level pricing adjustment, even with a 740 credit score. Does that mean your rate's higher by 0.75? No, it doesn't mean that. It just means if, for example, if there was a par rate, right? A par rate is every lender's base rate. If you put 3% down and you have a 740 score, let's say the base rate today was 3%. This is just an example. I'm not quoting rate. If that base rate, right, is 3%, that means if you had a loan level pricing adjustment to get that 3%, they would have to charge you 0.75 of the loan amount. For example, on a $100,000 loan amount, they would have to charge you $750 for that 3%. If you're doing 5% or more, you can see that 0.25. That means the lender has to charge you $250 for you to get that 3%. A lot of lenders don't do that. What they typically do is they will increase the rate to absorb the loan level pricing adjustment. So if the base rate was 3% or the par rate was 3%, instead of getting a 3% and having the lender charge you 0.75, what they typically do, they will increase the rate to absorb that 0.75, right? Rates change daily depending on the rates you're going to get. You know, every lender has a different base rate or par rate based on their expenses and based on the loan officer compensation plan. Of course, if the loan officer has a higher compensation plan, that lender has a higher base rate because they have to pay that commission, right? Also, what's added on, right, after the base rate, if you do want that specific rate, they can either charge you that loan level pricing adjustment or they just increase the rate. As you can see here with 740, looks like it's a quarter charge. When you get down to 60%, which means you have 40% down, right? There's no loan level pricing adjustments, right? The bottom section right there is if you were doing a cash out, right? The top portion that what I showed you guys was pretty much for purchases and rate and term refinances, right? So if you're purchasing a home or you have a rate and term refinance, that would be your loan level pricing adjustment. If you were doing a cash out, you got to add those adjustments on. That's why cash out, because of pandemic right now, they've increased the loan level pricing adjustment, okay? Guys, hopefully you understand now what a loan level pricing adjustment is, because now it's easier to explain the adverse fee, right? These right here that I'm showing you are loan level pricing adjustments based on risk. Remember, guys, the bigger on conventional, the bigger the down payment, the lower the risk. The better credit score, the lower the risk, right? This doesn't even take into consideration if you are going investment or buying a condo. There's more loan level pricing adjustments, right? So definitely, now you understand what a loan level pricing adjustment is. The next step is understanding why are they doing this? There's already all these hits. You're seeing like hit after hit after hit after hit, right? Why are they doing all these hits? Well, according to the Federal Housing Finance Agency, the FHFA, right? Fannie Mae Freddie Mac went to the FHFA and told them, hey, by the way, we need to add this fee. They can't just illegally go out and add a fee without a reason, right? Because it has to be a justified, bona fide fee. And the Federal Housing Finance Agency, they went to tell them, like, it is necessary to cover the projected COVID-19 losses up to $6 billion, right? So if people can't make their mortgage payment and they go into forbearance, those payments still need to get paid to the investors. So for those payments to get paid, right, they got to take the money somewhere. So how they're taking it is in this adverse fee, right? So they're hedging their bets right now. I don't know why they're doing it. Right now, the truth is under 3 million people are in mortgage forbearance right now. And out of that 3 million people, only 9% are upside down. The other 11% are not upside down, right? It would be more of a blessing if those homes went into foreclosure, but they won't. They will sell before they foreclose on. And when they sell, they will pay off, right, the forbearance amount. Right now, all that forbearance money that's stacked on the back of your loan, right? The lenders still, Fannie Mae and Freddie Mac still have to pay the investors who invested in Fannie Mae and Freddie Mac, right? And they're investing all these other lenders, right? They still got to get paid. If you went out and you bought a mortgage bond or mortgage-backed security, you're still getting paid even though the lender's not collecting a mortgage payment, right? So if you ask for mortgage forbearance, those payments are still being paid to the people who bought these mortgage-backed securities and these mortgage bonds. Someone has to pay it. So the way they're paying it on all conventional loans after December 1st, they added something called the adverse fee to absorb the losses, right? But what's going on? What happens if everyone's going to make their payment? What happens if that loss that they assumed that was $6 billion ends up being only $1 billion? They're collecting that money. So Fannie Mae and Freddie Mac are using it as an excuse right now because forbearance is down, right? Under 3 million in forbearance. Now under that 3 million, most people have the equity to pay off that forbearance. Why are they charging everyone an extra adverse fee, right? That's what everyone's asking. But that's what they're telling everybody is that they're charging this adverse fee to encounter any losses, all right? So what is adverse refinance fee? So it's only on conventional refinances that are backed by Fannie Mae and Freddie Mac, which is pretty much almost everybody, right? The fee is 0.5%, okay? For example, so on a $200,000 loan amount, it would be $1,000. So let's say you take a par rate, right? Or a start rate, a base rate or a par rate from a lender. Everyone's gonna be different. Typically, before this December 1st, you would get that par rate, everything would be fine. So you're getting a lower rate and you pay your normal closing costs, right? So after December 1st, there's two things that's gonna happen. If you want that par or base rate, you're gonna have to pay half a point. So on 200 grand, you're gonna pay $1,000. On 400 grand, you're gonna pay $2,000. On 600 grand, you're gonna pay $3,000. If you don't want to pay the money, which a lot of lenders are not even providing that option because they know consumers will shy away from it, right? So what they're doing is they're increasing the rate. So if they're increasing the rate to cover that adverse fee, they're gonna make more money, right? For example, on a $600,000 loan amount, you can pay $3,000 up front, but they increase the rate by 0.125 over 5 or 6 years. They've made that money and then some. So that's how you're paying more, right? So this adverse fee is actually allowing the banks to make more money to absorb the loss, supposedly. So that's what is happening after December 1st. A lot of lenders already rolled it out before December 1st, right? But December 1st, everybody's gonna roll it out, right? So this is only on conventional refinances, not purchases, not FHA, conventional refinances that are backed by Fannie Mae and Freddie Mac. They're increasing, right? Like I said, they either increase the rate to cover it or they're gonna charge you 0.5%, right? So remember that. So for those who didn't refinance, rates are at an all-time low. Even if they increased it by 1/8 to cover the cost, it's still worth it. Some lenders might increase the rate by 1/8 to cover the cost, but then in addition, you might get some lender credit, right? So sometimes when they're increasing the rate, they might be able to absorb that adverse fee, but you also might get a lender credit. Or you might want to talk to them, hey, I'd rather come out of pocket. And for those of you who don't want to come out of pocket, if you're going conventional, most likely you have a certain amount of equity. If you have a certain amount of equity, guess what? It is absorbed in your equity. So you either can pay out of pocket, you can absorb it in your equity, or take a higher rate and get a lender credit to cover it, right? Which that's what most people are doing. So as you start seeing December kick in, for those of people who didn't refinance it, rates are still at an all-time low. You're still in the 2s and low 3s, right? But you're gonna wonder, why is my fees a little higher? Why is my rate a little higher? Now you know why. It's because of the adverse fee, all right? So Fannie Mae and Freddie Mac, remember this. And this is inside for those of you who don't know about mortgages and real estate before 07, 08. Fannie Mae, Freddie Mac got bailed out by the government in 2007 and 07, 08, okay? So when they got bailed out, you know who bailed them out? The government. You know with whose money? The taxpayers' money, okay? So they got bailed out. So when they got bailed out, they got put under something called conservatorship, means the government monitors them. And they've already paid back the money that the government bailed them out 2 times over already. So they should be out of conservatorship. But what the government's doing is they're saying, if you want out, we need to see that you are profitable and this is not going to happen again. So because of that, this is my theory, my belief, which a lot of other lenders are saying the same thing. They're trying to make their books look stronger by charging this adverse fee so they can make that 0.5% on all these conventional loans. So they go, government, we're profitable. We paid you back twice. We're profitable. Let us out. Let us out. It's like your kid, right? It's like your child made a big mistake. Now they got to stay home. They can't go outside. They're punished, right? But once they show you some good merits that they can survive and be on their own, so you're going to let them out again, right? So definitely that's what is going on right now. That's the reason why rates, right? You'll start seeing, why are rates a little higher? Why are my fees a little higher? It's okay. But what I would do, I would look at a couple things. When you're talking to a lender about a conventional refinance, I would want to know, hey, charge me that adverse fee up front. I might rather pay it, right? Because 1/8 of a rate, you might want to see how much interest you're going to pay over 30 years with 1/8 difference, right? Or, hey, keep my rate low. I'd rather pay it in my equity, right? Let's say you have to bump up the loan amount, $2,000, $3,000. So on 600 grand, that's $3,000. On 700 grand, that's $3,500. On 200 grand, it's $1,000, right? Give me the lowest rate and just charge my adverse fee up front and let me absorb it in my equity, right? But what you want to do, well, which way is the best way? Run the numbers. Run the numbers with you absorbing it in the rate. Run the numbers with you absorbing it in the equity. Run the numbers with you paying it up front, right? If it's a short-term investment, which means you're not going to live in the home longer than 3 years, I might not come out of pocket with it. I would just let it absorb it in the rate. Don't eat it up in equity, because when you sell your house, you might need equity to pay real estate commissions, right? But the best thing you can do to find out what's best for you and your family, always run the numbers. no matter if it's a refinance, no matter if it's a purchase, no matter if you're pulling cash out to pay off debt, whatever the scenario may be, the best thing you can do is talk to a lender and run the numbers. But now you know the different options you have available to you, right? So let's go back to it, right? On a conventional refinance, with this adverse fee, you can have them charge you up front and pay it out of pocket, right? I would only do that if this is a 30-year fix. I'm never refinancing again. I'm never moving again. Pay that money up front, because if they increase the rate, you're going to pay more interest over 30 years. If you increase the loan amount, you're going to pay more interest over 30 years. So option number one, pay out of pocket. Option number two that I feel, if it's a long-term investment, increase the loan amount to cover the rate, right? Increase the loan amount to cover the adverse fee. If it's a short-term investment, just take a higher rate, cover the adverse fee, right? So that my friends, is why December 1st, right, refinances will be more and more expensive. Some of you guys might not even know it. Some of you guys might not even see it. The reason why you might not know it and you might not see it, because lenders aren't going to talk about it. What they're going to do is give you a little bit higher of a rate to cover the adverse fee. But remember, fam, you have options. And the best way to know that you have options, always ask, all right? Let's go some Q&A. If you have questions tonight, we got answers, all right? So that was the most popular question. What is this adverse fee? It's a fee charged by Fannie Mae and Freddie Mac because they say because of pandemic, it's a higher risk, so they're trying to absorb the cost. But they're really trying to bail themselves out, make more money, right, and get out of conservatorship. All right, guys? Let's go some Q&A here. Grace O. If I just bought a house FHA, when can I refinance? If you just bought FHA, you need to make 6 payments before refinancing, okay? Hopefully that helps you out there. Linda, what's a jumbo loan? A jumbo loan when the loan amount is above the conventional loan limit, right? So for Orange County, LA County with the new loan limits, it's above 822. For Riverside, San Bernardino, when the loan amount is above 548. Hopefully that helps you out there. Rebuild SoCal, YouTube question. Hey bro, can you touch base on the adverse fee again? Regular refinance, please. Rebuild, the adverse fee is being charged on conventional loans only, on conventional refinances, right? It's about a 0.5% charge. They're either going to increase the rate to cover it, or they're going to charge you the adverse fee, right? They're for refinances after December 1st. If you have more questions on it, definitely watch our video or reach out. Thanks, Rebuild. Villanueva, you mentioned jumbo loans. Is that what I would need to buy over loan limit? Yes. If you go over loan limits, you're going to have to put 20%. Actually, right now with COVID, there are only a couple banks doing 10% down. Most banks want 20% down right now. So if you go over the loan limits, you got to put 20% down, okay? I think that's about it for us tonight, guys. Hopefully you enjoyed tonight's live. You enjoyed tonight's Q&A. I want to say thank you to everyone who commented, who liked, and please, if I didn't bring you value, please share this video. All right, guys? And if you haven't subscribed yet, hit the subscribe button, all right? We want to end all our episodes with our attitude is gratitude. Without you, there would be no us. So thank you so much, Wham Fam, and have a happy Thanksgiving. Gobble, gobble.